Let's chat now about the day's movements with Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for joining us this evening. So markets have been higher ahead of the US inflation data and pronouncements from the Fed. But why has this not translated onto the JSE?
The JSE tried, as you are saying, at the opening, we were up, but I think those mining data number that came out spoiled the whole thing. And as we are talking now, we can even see that our global peers are more of flattish to negative. And I think it's the question of that CPI number that came out of the US that people are rating it that is still a little bit high. So meaning that it reinforces that speculation that interest rates might stay higher for longer. But with our mining data, as much as manage to increase production, there's no point of producing more because you'll end up with oversupply if your sales are continuing to drop. And as the guy said, it's all because of this logistics and it's mainly because of Transnet. And that unfortunately had a negative impact when it comes to our resources because those were the biggest losers on the JSE.
Now, oil rose slightly ahead of the interest rate decisions, but dropped again. But oversupply fears linger and slow demand growth caps gains. What does this mean for the outlook of the price in the short term?
If oil prices continue to fall, then that will be great for us. But unfortunately, the rand as well has to come to the party because we see the rand now is starting to go back to the likes of 19, which doesn't bode well because we are a net importer of oil. But yes, markets are saying, yes, we've seen that attack when it comes to a tanker. So that is also fiddling with their supply coming especially from the Middle East. But as you said, excess supply that we already have and also demand growth, which is not looking okay, then unfortunately outweighs all those risks that we were talking about when it comes to supply coming mainly from the Middle East.